Hello, everyone. Thank you for joining us on our webinar, and we're going to talk about the fiscal requirements for the food service program. My name is Stacy Lamper McFall, and also with me today is Tanae Curtis Brooks. Now, we're both financial analysts within the Office of Health and Nutrition Services, and please keep track of your questions during the webinar because we'll be holding a live Q&A in August, and you'll be able to ask any questions you might have. And also our information is listed at the end of the presentation. So now I'm going to share my screen. Okay, Tanae, can you see the slide?
Yep, looks good.
Okay, all right. So as I mentioned, we're going to talk about the core competencies for the fiscal requirements. Now, before we get started, I want to make sure everyone understands where the rules and regulations come from. Now, Congress determines what the rules and regulations are. So the USDA Food and Nutrition Services is the implementing agency at the federal level. Then MDE operates under the Midwest Region Office of the USDA. And then MDE is the state implementing agency for all the school food authorities, which we also call SFAs or sponsors. Now, neither the state superintendent nor other members of MDE have the authority to change the federal regulations. We're simply in charge of assuring that they're implemented at the local level. Now, every 3 to 5 years, your school food authority or SFA will undergo an administrative review. And the resource management review is the fiscal portion of that review. So you'll get an email from the GEMS-MAR system, which is something you'll need to familiarize yourself, when your district is up for a review. So the program analysts will follow up on your program side, and then the financial team will follow up on the fiscal portion of that review. So a lot of food service directors think once they complete their administrative portion that they're all done. But don't forget, there's also a fiscal component called the resource management review. And Tanae and I are the financial analysts that process those reviews. Now, we also have one new financial analyst. Her name is Michelle Needham, and she will also be assisting in processing those reviews. So one of the requirements is to have a separate account for food service, not necessarily a separate bank account, but an account exclusive to food service in your financial reports, like in your general ledger. So you must use account code 25 as indicated in the Michigan Public School Accounting Manual for the Food Service Fund. Now, typically the accounting practices are performed in the business office, but we expect the business managers and food service directors to work hand in hand when complying with the financial requirements. Your business office for your district should be able to pull from your accounting system the food service revenue and expenses, and they should be able to run a trial balance or a balance sheet just for the food service fund. Now, there are 4 main sections in the resource management review. There's the maintenance, also the financial health of the program, your paid lunch equity, or we call PLE, your revenue from non-program foods, and indirect costs. Okay, so now let's talk about the maintenance section of the RM review. The maintenance section looks at the financial health of the food service account and your financial compliance with regulations, because it is a restricted fund. We will look at your FID school meals report, and FID stands for Financial Information Database. for public schools, or the SLYR, which is School Lunch Year-End Report for non-public schools like RCCIs, which is a residential child care institution like your juvenile homes. So we'll look at the FID for the public schools, SLYR for non-public. And they are your year-end financial reports that someone at your district fills out. So it's all of the district's financial information put into the state database. Now, I'm sure as food service director, you may be involved in the food service section, the Fund 25, okay? As food service director, you and the business manager will be notified when you're up for a review and all the documentation that you will have to upload into the GEMS-MAR system. During the maintenance section of the review, we will test things like invoices, your payroll, your equipment purchases, your internal control procedures, and then you're also going to be required to submit a detailed general ledger. We will also determine your ending fund balance, which is your revenue less expenses, and whether or not your district needed to transfer money into the food service fund from the general fund at the end of the year to cover a loss. You cannot carry a loss in any federally funded program. So it has to be made whole at the end of the year with either a transfer from GF or some other non-federal funding source. So those are transfers into the food service account, and that's through a fund modification. Now, we also make sure that there have been no transfers out of the food service fund to support other school operations. But this does not include indirect costs. The only allowable transfer out of the nonprofit school food service account is for indirect costs, which we cover later in this presentation. MDE also assesses what we call your net cash resources. So since this is a nonprofit school food service account, you're required to limit your fund balance and invest the proceeds back into the program. So you're only allowed to have 3 months average expenditures in your net cash resources or your fund balance. So at the end of the year, the FID school meals report or your SLYR calculates this for you. And the calculation is done by taking your total program expenditures for the year, excluding capital outlay, divide it by 9 full operating months, and then multiplying by 3. So therefore, you've got your average 3 months expenses, okay? If your net cash resources is above your allowable fund balance, then what you have is called an excess fund balance. And then spend down plans are required by NDE if the district does have an excess fund balance on the finalized FID school meals report. So this is one of the areas where the food service director and the business manager need to work closely together, because the food service director needs to know what the fund balance is throughout the year so that an excess fund balance isn't triggered in the first place and then you don't get a finding. So since food service directors determine the spending, you'll also need to know what that fund balance is. Now, in the maintenance review, we also make sure you're spending the funds only on allowable costs, more on that later, and that you have written internal control procedures. And Tanae will talk about that later as well. Okay, now back to excess fund balance. If you end the school year with an excess fund balance, you're required to submit to MDE a spend down plan into GEMS-MARS detailing how you're going to spend down the balance. MDE sends out notifications each spring to districts that have an excess fund balance, and that is determined again by your FID or your SLYR. So the excess fund balance must be spent by June 30th of the current year. And so that's why it's important to know what your fund balance is throughout the year so that you can make sure that those funds are spent. MDE, however, will allow a 1-year carryover extension, but the SFA's plan of action must be approved prior to requesting the carryover. You can submit that with your plan of action, but you still, first we approve the plan of action, then we approve the portion of the plan that you want to carry over. And again, that is submitted through the GEMS-MARS application. Now, once an SFA submits a plan of action into GEMS-MARS, you will then receive an email notification either approving the plan of action or asking for more information. Now, during the RM review, we will be checking the prior 3 school years, and any SFA with an excess fund balance during any of those 3 years will be issued a finding, and you have the potential for further findings if the district failed to submit a required spend down plan, or failed to execute a plan, or failed to obtain MDE's prior approval for equipment or other capital outlay. And so now I'm going to turn it over to Tanae Curtis Brooks to talk about equipment purchases.
Hello, everyone. My name is Tanae Curtis Brooks, and I'm going to be going over equipment or other capital expenditures. Equipment is the most common way to spend down your excess fund balances, as it typically involves higher price items. Regulations do require prior written approval for equipment and capital expenditures. Equipment is defined as items having a useful life of more than 1 year and the cost per unit price of $5,000 or more. Our fiscal monitoring unit is pleased to announce the release of our new equipment and capital expenditure approval process. We are excited about the overhaul and believe it will improve the process. This will also reduce the number of equipment requests that sponsors must submit. The new process is more streamlined and automated, which will benefit both the sponsors and MDE. If you buy equipment for food service, you are required to get prior approval from MDE for the purchase. Now, the exception to this is when the item is on MDE's pre-approved food service equipment list. The pre-approved food service equipment list now includes most of the ordinary food service equipment. Requests will now only be for unique items or large projects. If the planned equipment purchase is listed on the pre-approved equipment list, then no further action is needed. If you do need to get prior approval from MDE, the equipment and capital outlay request form is now entered online directly into GEMS-MARS. There will be no more having to fill out the form and emailing to MDE. You can find the form on our website. Also, we want to make sure that you review the latest admin policy. It is MDE Food Service Administrative Memo number 5, and it is titled, When Do You Need Pre-Approval for Food Service Equipment Purchases, along with our pre-approved food service equipment list for more details about the new equipment process and the requirements. Okay, and so for the equipment approval process, first what you're going to do is check the unit price. Next, you want to check to see if the equipment is on the MDE pre-approved equipment list. If needed, you would then fill out the equipment and capital outlay request form in GEMS-MARS. The submitted form must include the actual cost from quotes obtained by the sponsor. Sponsors are required to follow proper procurement by obtaining quotes for purchases prior to obtaining the MDE approval. The sponsor would then finalize the procurement. So here are a few examples of allowable costs for your equipment or other capital expenditures. And if you had the excess fund balance, kitchen serving line renovations, cafeteria tables and chairs, that could be a shared cost, and I go into that in a second. Small kitchenwares, those are allowable. Ovens, freezer, POS systems. On the other side, we have unallowable items like land, infrastructure, contingency fees, security cameras, public announcement systems, and air conditioning are unallowable to purchase with food service funds. These are just some of the examples of what would be unallowable. And it should also be pointed out that if items like cafeteria tables and chairs will be used in a shared space, then the cost is required to be shared proportionately with the other programs that will benefit from the purchase as well. Okay, so for the local meal charging policy, sponsors were required to develop and implement written local meal charge policies by July 1st of 2017. The written charge policy must be clearly communicated to school administrators, school food service staff, families and students, social workers, school nurses, the homeless liaison, and any other staff members that may assist students that are in need. The communication of the meal charge policy may be done in a variety of ways, but the regulation requires at a minimum that all households be notified in writing at the start of each school year and households that transfer into the school district during the school year. Developing and implementing this policy along with a bad debt policy will require a collaborative effort from administration, the business office, and the food service department, and anyone else involved in meal charging. These policies focus on negative balances for the current active students for the local meal charging. Now, the other policy is the requirement of the bad debt policy. And the bad debt policy focuses solely on inactive negative student balances. Sponsors have from the end of the school year of June 30th until December 31st of the same year to try to collect on negative balances for the inactive students. Negative balances for inactive students must be made whole in the food service fund with non-federal funds like the general fund, and then correspondingly written off your POS system as of December 31st every year. After that time, food service is not permitted to expend any time on resources and collecting on those debts. After December 31st, however, the business office may still track and try to collect on those debts. Sponsors must have a written bad debt policy, which is included in the written meal charging policy that is also required. Negative balances for current and active students should be addressed in the sponsor's meal charging policy. We have noted in reviewing some of the bad debt policies recently that many sponsors are using the generic NeoGov as their bad debt policy. The generic NeoGov wording that many sponsors are using is outdated and not specific enough. In addition, we have noted that many policies state that all student balances must be written off by December 31st. That is not accurate. The bad debt policies must only include the policies related to the inactive students. So we went over the maintenance section of the RM review. So here is what we're going to give you is some of the common findings we see for the maintenance portion. So sponsors should ensure costs in the nonprofit food service account represent charges for actual expenses on your financial records, not budgeted or projected amounts. Supporting documentation of direct costs charged to the program is also required. Often we find costs charged directly to food service without supporting documentation that should be taken indirectly. These costs are unallowable and must be restored to the nonprofit food service account. Also make sure you have separate financial tracking for all revenue and expense categories exclusive to food service, and that these financial records tie out to the FID School Meals Report or SIRE based on the Michigan Public School Accounting Manual Chart of Accounts. Also, the USDA expects that sponsors have proper written internal control procedures on allowable costs, and that sponsors have written meal charging and bad debt policies in place and are also making the food service account whole every year. The bad debt recovery must be transferred in as a fund modification to increase revenue. It cannot be processed as a netted transaction. Now I'm going to turn it back over to Stacy for the review of the Ple tool.
Okay, I'm going to discuss what is the paid lunch equity tool, what we also call Ple tool. So the tool is used to determine your student paid lunch pricing, and something you'll need to familiarize yourself with eventually. Now, typically I give very detailed instructions on how to fill out the tool during these webinars. But the reason I'm not going to do that now is because for school year 21/22, most districts will be running SSO and SLP, where all meals are free to students. And since the tool is used to price students' paid meals and meals are free under SSO, I don't think that's going to be a good use of time here. So I could show you now, but it won't be relevant until meals are pricing again. And it's a lot of detail to remember when you're not even going to use it this year. Now, if your district ends up running traditional NSLP for the school year 21/22, reach out to one of us and we'll walk you through how to fill it out. As of the date of this recording, June 29th, 2021, the USDA does not have the applicable guidance to fill out the PLE tool anyway, but hopefully soon, so we can assist you if needed. But again, that's only if you're running the traditional NSLP. Now, this is simply a snapshot of what the two main tabs of the PLE look like. There are several tabs, but most districts use the first two tabs. And I would give you all the reasons why would you would use the other tabs if I were doing the normal instruction. But I just wanted you to see what it looks like, because next year you will likely need to learn how to use this. This is something we'll likely train on next year, so keep your eye out for other MDE trainings. And now Tanea is going to talk to you about non-program foods.
Thank you, Stacy. Now moving on to non-program foods. What are they? Non-program foods refer to any non-reimbursable foods and beverages purchased using funds from the nonprofit school food service account. Non-program foods are any food sales outside of a reimbursable program meal. So examples of this are a la carte sales to students, which include milk sales to students that bring a lunch, and extra entrees, food sales to adults, catering internally and or externally, vending, concessions, or any other sales outside of a reimbursable meal. What are the non-program revenue requirements? Sponsors are required to ensure that all the revenue from the sale of those non-program foods accrue to the nonprofit food service account. This means that no food purchased with funds from the nonprofit food service account can be offered free of charge. If food service purchases the food, then the nonprofit food service account must also receive the revenue for the food. Also, that revenue available to support the production of reimbursable school meals does not subsidize the sale of the non-program foods. So this means that the non-program food items must be priced appropriately to fully cover all of the costs. This would be including the product cost, the labor, the paper products, any overhead, and ideally return some of the profit to the program as well. The current guidance for the non-program revenue is found in the USDA memo SP 20-2016. And we highly encourage all sponsors to read through this memo as it gives way more detail regarding the requirements for revenue from the non-program foods that can be covered in today's webinar. It is also necessary to ensure that all foods sold in a school and purchased with funds from the nonprofit school food service account generates the revenue at least equal to the cost of such foods, so that sponsors are not using federal reimbursement funds to supplement the sale of the non-program foods. When we review a sponsor's revenue from non-program foods documentation, we must perform this calculation to test the compliance. The revenue ratio, which is the non-program food revenue as a percentage of total food revenue, must be equal to or greater than the food cost ratio, which is the cost of the non-program foods as a percentage of total food costs. There will be a finding in the RM review if a sponsor's revenue ratio is less than their food cost ratio. This would indicate that their non-program foods are not priced properly and that federal reimbursement dollars are being used to supplement the sale of the non-program foods, and that is unallowable. Here is a screenshot of the MDE a la carte pricing worksheet. The tab is used to set a la carte pricing based on a desired food cost percentage. The tab is pre-populated with a few examples. The 40% food cost entered is optional, but recommended as the industry standard because sponsors with around a 50% food cost or higher are almost always out of compliance. In this worksheet, a la carte items unit costs are entered into the total unit cost column. The recommended selling price will be automatically calculated based on the desired food cost percentage. The actual selling price column is used to enter the sponsor's determined selling price. You will also note the food cost percentage column. This column will indicate each individual a la carte item's food costs based on the actual selling price. Also, the average food cost percentage is calculated on the bottom right, which in this example is 34.72%. The average food cost percentage is used to determine compliance based on the revenue ratio calculations that the USDA requires in the RM review. When you're filling this out, please remember to delete the examples, because otherwise that will mess up your percentages because they would not be accurate. So on to the calculation. This is the screenshot of the revenue ratio tab of our a la carte pricing worksheet. This tab is used to check the sponsor's revenue ratio compliance. The sponsor's non-program food revenue from all categories is entered along with the total annual revenue. The sponsor's average food cost percentage will be carried over from the pricing tab and is multiplied by the non-program food revenue to determine the non-program food cost. In this example, it is $34,722.22. The sponsor then enters their total annual food costs. The revenue ratio is the sponsor's non-program food revenue divided by the total revenue. The food cost ratio is the sponsor's cost of non-program foods divided by their total food costs. The sponsor's revenue ratio must be equal to or greater than the sponsor's food cost ratio in order to be in compliance. If it is not, it means that federal reimbursement dollars are being used to supplement the sale of the non-program foods. In this case, the revenue ratio of 13.79% and the food cost ratio is 12.62%. Because the revenue ratio is greater than the food cost ratio, this example would be in compliance. Now for adult meals. This is a screenshot of the MDE Adult Pricing Worksheets pricing tab for traditional pricing. The tab is used to determine the minimum required adult meal price. Please keep in mind that this is an example of last year's adult pricing tool. The reimbursement rate and commodity entitlement rate change each year, and we are waiting on the USDA to release the 21-22 rates. In this example from last year's adult pricing tool, a student breakfast price of $2 with the addition of the most common paid student breakfast reimbursement rate from 2021 of 32 cents and the addition of sales tax on the subtotal results in a minimum required adult breakfast price of $2.46. In the lunch example, a student lunch price of $3 with the most common paid student lunch reimbursement rate from school year 2021 of 40 cents and the addition of the commodity entitlement value for school year 2021 of 24.5 cents, as well as sales tax on top of the subtotal, results in the minimum required adult lunch price of $3.86. Our financial analysts will also review adult meal pricing to ensure that these meals are priced appropriately. Sponsors are required to charge adults more than the students to account for the commodity entitlement dollars, the paid meal reimbursements, and the sales tax. To complete this tab, sponsors should use their highest paid student price to determine their minimum required adult price at each level. If a sponsor has only one adult meal price for breakfast and one adult price for lunch district-wide, the price must be set based on the highest student meal price in the district. The MDE Adult Pricing Worksheet also comes with tabs on guidance and instructions, which will give you very detailed steps on how to determine the adult meal pricing. whether the district is CEP for the community eligibility provision, non-CEP, or has universal breakfast. The MDE adult pricing worksheet is also updated annually with the new commodity entitlement value and reimbursement rates. Please note that the tool is populated with the most common reimbursement rates each year. So you as a sponsor must check and modify this calculation if your reimbursement rate is different from the common rate. So when we do review the non-program revenue in an RM review, we will determine if the sponsor's non-program revenue ratio is equal to or greater than the food cost ratio, like I mentioned. We will also review adult meal pricing to ensure these meals are priced appropriately. We will review supporting documentation for catering and vending, which may include looking at food invoices and the sponsor's selling prices or catering billing to make sure the items are priced sufficiently. We will also check to ensure that the sales of the non-program foods flow to the nonprofit food service account as required. So let's go over some of the common findings that we see occur in this area during an RM review. Non-program foods are priced too low or offered free of charge. That would be unallowable. Adult meals, a la carte and catering, etc., cannot be offered free of charge or allowed to charge negative to accounts. Doing so would require a non-federal funding source like the general fund to cover the cost in order to maintain the compliance. Also remember that all food sold in a school and purchased with funds from the nonprofit food service account must generate revenue at least equal to the total cost of those foods. The USDA regulations do not allow the federal reimbursement dollars to supplement the sale of those non-program foods. Adult meal prices should also include the value of any USDA commodity entitlement, the paid meal reimbursement rate, and must also include the sales tax. A la carte and catering should be priced around the industry standard of the 40% food cost, leaving 60% left to cover labor, paper products, overhead, and return some profit to the program. All revenue from the non-program foods must also flow to the nonprofit food service account. We also see reporting issues when sponsors are not tracking and reporting a la carte, adult meals, and catering separately from those reimbursable meal sales and independently from each other as required. And failure to do so makes assessing compliance nearly impossible. So those are some of the common findings that we see. Now I'm going to send it back to Stacy to wrap up and go over the indirect costs.
Okay, so as Tanae said, I'm going to cover indirect costs, which are things that are shared costs with the rest of the school, like your electricity, like your water, trash, custodians, those kinds of things. So charging indirect costs is a way for food service to share in the expense of indirect charges so that food service pays their fair share for the total district's indirect costs. Now, often the business manager is responsible for this piece, but something a food service director should know as well. So each year, MDE publishes the indirect cost rate that your district would use. And food service uses the unrestricted indirect cost rate. You can find your rate on our website. That's on this slide. But there is a maximum allowable rate. So for public schools, the maximum is 15%, and for non-public, it's 10%. Now, as I mentioned earlier, you are never allowed to transfer out of food service fund unless it's for these indirect charges. So there's two examples of types of costs in food service. There's your direct and your indirect. Now, to differentiate, direct costs can be tied specifically to the food service program. So for example, your food costs, your cook salaries, your food service director salaries, costs of a stove or refrigerator, etc. Costs that only support food service, no other program. Now, indirect costs are for general operations and would support other areas, not just food service. Those are things like your electricity, your trash, your custodial, your payroll clerks. Those indirect costs should be taken using your indirect cost percentage. Now, some schools would like to charge for what is typically indirect directly. Now, when charging for costs that benefit multiple programs, including things like custodial and trash, the USDA requires very specific documentation and must be used to substantiate those exact costs. An allocation method is not allowable. For example, you can't use a percentage, or you can't use square footage. Now, for instance, in the case of direct custodial charges, daily timesheets are required that substantiate exact time worked specific to food service. Utility charges would require a separate meter with specific billing, and trash would require either a separate contract specific to food service or separate dumpsters, and then billing exclusive to food service. In addition, schools cannot bill directly for costs that benefit multiple programs and recover indirect costs on top of it. That practice is considered double dipping and is unallowable and would be required to be restored to the food service account. Now, we beefed up the auditing manual for this area. Costs should be captured consistently either as direct or indirect, never both. We also added details on the specific documentation that must be used to substantiate direct costs. Insufficient supporting documentation makes costs unallowable, and then unallowable costs must be repaid to the food service fund, either from the general fund or other non-federal funding source. And those are things like donations. So now when calculating how much your district can charge for indirect cost, this is the calculation that we use to determine your maximum allowable indirect cost. We think it's a good one because it starts with the total cost of the program and then deducts what is not allowed in the indirect cost base. So that way everything is captured. And we also provide a template on our website that has the specific calculation to use. We think it's much easier to use our template so your district can make sure to get the correct direct cost base. If it's not used, your district has to provide documentation to support your calculation. Now, these are the common findings when reviewing indirect costs. Again, please have your district use the MDE indirect cost template for food service, because we think it will streamline the process and possibly mitigate errors. And if you ever have any questions regarding direct or indirect charging, please reach out to one of us. Now, here's some contact information. We have a dedicated main fiscal monitoring email address and phone number. If you contact either one of these, your question will get routed to the correct person. We also have a FAST website that's got lots of useful information for guidance and resources. Here is our individual contact information. And remember, there is a live Q&A session in August if you have any questions that are related to this webinar. So thank you for joining us today, and have a great rest of your day.